As always, my name is Keith here with Shark Indicators. We've been involved in the NinjaTrader ecosystem since 2011, providing tools like Bloodhound and Blackbird that help traders be more productive and in control of their own trade systems. We're always looking for ways to add to the trader's toolkit, and Shark Week is a big part of that mission. Before I pass it off, let's take a quick look at the risk disclosure. Futures, foreign currency, and options trading contain substantial risk and is not for every investor. And of course, past performance is not necessarily indicative of future results. Chris Knox created ZoneTraderPro in 2007 for his personal trading because he got tired of buying software and going to seminars where something worked great on a Saturday but didn't work as expected when the markets were actually open. We've all had that experience. ZoneTraderPro was initially dedicated to repetitive patterns found in market price action. In 2017, he began development of pattern matching in the order flow, resulting in the current ZTP order flow suite of tools. Later, he developed tools for detecting order size, leading to the creation of 100% unique tools for cumulative delta, divergences, accumulation, distribution, and volume analysis. In 2020, Chris began developing Bloodhound templates, which focused on the trades being placed from the options dealers and integrating that onto his platform.
Want to thank everybody for joining. My name is Chris Knox, and wanted to thank Bloodhound for this opportunity to lead off Shark Week. Basically, like Keith had said, what I have been doing is developing my software for my trading basically for the last 15 years. And as Keith said, in 2020, what I had done is I had started listening to a website called Spot Gamma, which talks about options and how they affect the ES futures. Based on what I was learning from Spot Gamma, I started to develop real-time templates in Bloodhound based on this options trading. And I also found some unique uses for the software that I had just developed with the divergences. So basically, what ZoneTraderPro is a combination of 5 different things: price patterns, order flow, divergence patterns, volume analysis, which is super, super important, more important than I think it's more important than actually what order flow tells you, because volume analysis is telling you something in real time, whereas order flow, it needs a bar to complete to develop a pattern. And then the last thing I do is the VIX analysis. So what is VIX? I realize there's going to be people here that know a little, know a lot, but VIX is a $. VIX is a ticker symbol from the CBOE. And it's basically there to measure the volatility on the S&P 500 index options. It's calculated and disseminated on real time. And that was what was important to me, is viewing something in real time and it representing the market expectations for volatility over the next 30 days. Investors use it to measure risk, fear, stress of the market. And the way it basically works is if the volatility is falling, it generally causes an imbalance in the supply of options from sellers and the demand for options from buyers. This daily change in the VIX is an indication of how aggressive the XPX options complex contracts are being purchased or sold. So why do we want to be involved with the VIX? Well, when options are traded, the person that's actually selling it to you is the options dealer. And he wants to have no directional basis. So he doesn't care if the market goes up. He doesn't care if the market goes down. And the way he's going to do that is he's going to hedge your bet with the ES futures. And the website that really explains this best, like I said, is Spot Gamma. I'm a paid subscriber to Spot Gamma. I don't earn any referral fees, so full disclosure. The information about the options hedging and the VIX is that Spot Gamma had distributed, and I basically learned from starting in 2020 is what led me to this research that culminates in what I do today. So what does Vegas and options dealers have in common? Well, the sports book at Vegas and the options dealer, they actually have a lot in common. When you think about the sports book in Vegas, you think about that they want to have an equal bet on each team. And they do this by adjusting the line so that an equal amount of bets will come in on each side. They have no directional exposure and they don't care which team wins. The options dealer is the same. He will buy and sell both puts and calls. A long call is an options bet that price will go up. A long put is an options bet that the price will go down. So here we have what the call option is. And down here, if a long call is bought, you go and buy a long call. That's a bullish bet. And it's going to be offset by the dealer by buying the US futures. Or if you sell a put, that is a bearish bet, and it is offset by the dealer buying the ES futures. And the opposite is true for a short call and a long put. Now, the options complex has a lot of terms involved in it, for lack of a better word. But the two that we're most interested in is delta and gamma. Delta is the theoretical estimate of how much an options value may change given a dollar move up and down. And when a customer enters into a negative delta trade, buying a put, selling a call, the dealer is short that put or long that call. So if the ES is going to trade lower, everything else being equal, the liquidity provider, the dealer, will sell the underlying hedge to hedge the delta in his directional exposure. The opposite is true if a customer enters a positive delta trade, buying a call, selling a put. If the underlying trade's higher, the dealer is going to buy the underlying to hedge his delta. Now, this leads to big market movements when options expire or customers close profitable positions, because these hedges are going to get unwound. And this is really what is why we need, as futures traders, to look outside of just the box of what our ES chart is telling us. When these futures hedges get unwound, this is important because these options, when they close, the VIX is going to move, and that's going to give us a signal that the ZoneTraderPro Bloodhound template is going to be able to pick up. So the next really important thing is gamma. And gamma is defined as the rate of change of an options delta per 1 point move in the underlying assets. And this is where it gets a really interesting and even more important. It's a measure of the convexity of the derivative's value, which is a big word salad, in relationship to the underlying. It is the first derivative delta. It's coming from the delta, and it's used when trying to gauge the price movement. The big takeaway from this is what I've got down here in red. When the options being measured is deep in the money, or deep out of the, when deep in or out of the money, the gamma is small. When the option is near or at the money, the gamma is at its largest. And basically that's what this chart right here is trying to show us. All options that are a long position have positive gamma while short options have a negative gamma. And in this chart that Zero Hedge took from Tier 1 Alpha, you can see that for most of 2020 into 2021, most of the time the market was in this positive delta gamma, or I'm sorry, positive gamma exposure. And that's what's basically driving these prices. The chart basically shows when the days were in long gamma and the red dots showing in short gamma. The long gamma environment is basically the market being stabilized, and what happens is the prices mean revert. In other words, we have a lot of stability. We don't have these huge moves. When it's in short gamma, which has basically been this entire year, that has resulted in a market that's destabilized as dealers have been forced to puke their deltas, meaning that they need to chase price as we move lower. And basically that's the point that Zero Hedge is trying to get across there. This is the current day's implied gamma curve. And what it's basically trying to show us here is that where we're at right now is this green line. And if we trade higher into the gamma, then we are going to have a dampening effect on volatility. You see right here at 4086, this is where the gamma flips. So this is neutral. And if price trades below there, that is going to take us into that instability. And as price goes lower, what happens is dealers need to short additional contracts as those puts gain value that they've sold. Now, this is really the last part of this puzzle, and it's basically showing us historic lows in liquidity in the ES futures. This is important because when a dealer needs to hedge or increase his hedge or cover his hedge because something has been closed, he's going to move market price. He needs to execute this trade. He's going to do it at a market order. And whether the liquidity is high or low, it doesn't matter. If there's less liquidity, then the dealer's trades are going to move markets even more. That's what makes this whole idea even more important. Now, here's an example of some hedging, some real-time hedging activity that was picked up from Bookmap and Spot Gamma. The picture on the left is Bookmap, and it has Spot Gamma's hero indicator, and the hero stands for the hedging impact of real-time options. On the right is my ZoneTraderPro chart right here, and you're going to notice this big trade there showing a negative 2,000 contracts going off. This is back on May 25th, 2021. It's kind of an old chart. I'll explain why shortly. And you can see that Spot Gamma over here picked up this 2,000 lot net short right there. That's what's it's being shown right here. And the delta strength also picked that up at exactly the same time. You're going to notice that on the bottom of the Bookmap chart, the hero indicator itself is showing a cumulative value for the day. And this is a very important part of the slide. The Spot Gamma hero indicator is reading hedging activity, and this becomes heavier as puts or calls are bought and sold. And then this is what is being reflected in the VIX. This is why we want to trade with the VIX. This particular day, heavily bearish, as you can see from this 120,000 number right here. That's a pretty high reading. And like I said, this is taken from last year. Now, personally, I've purchased a lifetime license to Bookmap, but I personally don't use it any because my ZoneTraderPro software picks up what Bookmap is basically charging a lot of money for. And that is these stops and icebergs that they also charge you for. So I was basically putting out $200 a month and decided that why do I need to do this, especially when my indicator down here is going to pick up that information. So I basically don't use Bookmap anymore. Now, this is a really interesting chart because over the days of July 13th and July 14th, we were making some lows here. And this is a brand new template that I've gone and created. I've adjusted my original template, and I really do like this template a whole lot more. Basically, what we see with this template is the symbols that I'm picking up, we could basically see them where they are extremely bearish, extremely bullish, bearish, and then what happens when we get to be extremely bullish again. You basically see them rolling on and rolling off. And when they stick, like it's stuck right here from, we started to see the indicator Bloodhound right here, right about 1023, tell us to start laying off the shorts and think about going long. Well, right here, this is one of my price patterns, which I call broken reversal. And then we trade something like 50 points, 55 points higher. The point of this template is simple. If you trade it against the trend, we had right here, we had dropped 100 points at this point from the overnight highs. And if you had it in your head that you were going to get short and stay short, well, you basically lost a lot of money because you didn't have this information. On the following day, we are going to make the basic lows trading down at 37.2375. And this is the following day, July 14th. There had been an 80-point drop from the overnight high. And again, what we're seeing here basically is put options being closed down at this big number down here of 37.25 on the SPX. As these put options are closed, the Bloodhound template is picking this up and again, keeping you out of trades that you don't want to be in. In other words, you don't want to be short. And it picks up these signals fairly quickly right off the lows. It just flips so fast here because options are being closed, hedges are being bought back. What we also see is my special divergence indicator, which is over here. This is a divergence indicator. Now, I'm going to talk a little bit more about this in just a few slides, but what you need to understand from here all the way to here is this was a positive delta. So price is falling something like 8 points here. The delta on this fall was actually positive. It wasn't negative. This is, again, a warning sign that we are making our lows. The smart money was basically buying during this time. Now, the way this is going to work is Bloodhound is going to tell us whether or not the VIX is bearish or bullish. So this slide, we're going to be looking at the VIX, but what we want to do is we want to trade our divergences in the direction of that VIX. So the ZoneTraderPro software basically has three types of divergences that we see on this chart. You have regular divergence, which is this up here. Now, so here's a regular divergence short, here's a regular divergence short right there. I don't personally trade this anymore. I don't like it. I like the other two types of divergences. Special divergence is what we see right here. Special divergence, like I explained on the last slide, is price rose, but while it was rising, the delta was negative. So that's what I call special divergence. There's also a third type of divergence, which is called accumulation and distribution. So here we see accumulation on these two trades, and here we see a distribution right here. When the VIX goes back green, we see special divergence and getting us long in each of those. Basically, we don't want to trade against our VIX, and that's why I don't have a trading signal up here. These trading signals up here, well, they can, however, be used as a reason to exit a trade, but I just don't want to trade against them. So the purpose of the template is determine, of course, bearish, bullish. Very easy to do. The black lines that I put here, this is basically when the VIX is flipping on this chart right here. And I've gone ahead and I've put in green the winning trades. Now, right here, this would have been classified as a losing trade because this is where we would have gotten our signal. And this is kind of really important to understand. I'm going to go over this a little bit more, and I am going to go to the live charts. It's really important to understand that just because we see the signal up here, that's not where we got the signal. What divergence is trying to tell us is just that the condition is present. So it's not giving us the go signal. The go signal is something that you're going to develop. But what it is doing in real time, right here, you see it fell down, and that is right where the divergence started to paint. Now, it's just what I'm trying to get across is this is not, we will have losing trades and markets will go against us because there are so many players in this market. They decide to close an option, we can see this spike. Now, this basically gets to when divergence signals paint. The divergence indicator allows you to set the zigzag. So in this case, I've set the zigzag to 35 cents because I'm tracking the SPY. And I'll give you the reason why I'm doing that in shortly. For this indicator to work, I don't care about time or bar size. Those are not important. What I need is a bar to close. So having that bar close, that's what gives me my information in Bloodhound. That's what gives me my information on the divergence indicator. So that to me is what is important, not time. You don't want to put a time bar in there because then you're going to be waiting for signals for a bar to close. And that's not what we need, especially in a fast market. Where you see the black lines on this chart, that is where we had a zigzag, and ZoneTraderPro went from measuring support to measuring resistance or vice versa. If price continues to rise when measuring resistance, as in this losing trade right here, the indicator is only telling us that there still is a divergence. So that a divergence remained this entire time from where we got the signal to where it eventually peaked at right there. So where you see that I placed the black lines, that's where we have a new zigzag. And where we have a new zigzag, that's where the divergence indicator will start looking again for any divergences. Now, basically, I'm going to go over what we're going to be seeing on the live charts, and I'm going to show you what this system did last week in a very volatile market, obviously. So quite frankly, the views stated here do not represent trading advice, and past performance is not necessarily indicative of future results. So an entry is going to occur when there is a divergence in the SPY. And remember, I'm only looking for the two divergences, special divergence or accumulation and distribution. Here we see three nice trades, each of them accumulation, and each of them had the Bloodhound VIX template responding to the direction of the trade. So the entry is fairly simple. The SPY here is being used as a proxy for the ES, because one of the things that I developed 2 years ago was I was looking at volume analysis, and the volume analysis part is down here. I minimized it. I made the font intentionally because we're not talking about volume analysis, but I wanted to go look at the volume analysis on the SPY. And that's going to tell us again if something is under accumulation or distribution. And when I put it on the chart, I noticed that the SPY was being manipulated in such a way that my divergence indicator was picking up this manipulation, and I was seeing way more divergences on SPY than I would be picking up on ES. I back tested this. I've got some very interesting videos. Basically, the videos on the website are basically going to replicate what I'm going to show you happened last week. But basically, the combination of using these two statistically put us in a good place. So what are the trade stop rules? Well, the first is that we're just stopped out. And like you saw in the first example, this is just going about 4 points against us. We don't want to be in this anymore. So that's the first. That's going to be our full loss. The second criteria that I use for an exit is if the divergence indicator becomes non-divergent, and these are usually a very small loss. So the divergence indicator, just like Keith talked about, I don't like to see signals that disappear. So the divergence indicator, when it's printing this dark blue line, is signifying that something is now non-divergent. So if we have something, if you see the blue line and it corresponds to a trade, I've called that a loss. And this is usually a very small loss because we've only entered right there at the earliest. And, that's half a point. The third thing that we want to really not be involved with is if we enter our trade right here and, first we get that initial reaction down, we're feeling good. We're 2-3 points or 2-3 ticks in going in our favor. We've entered our trade and suddenly it comes back. And now the Bloodhound template flips from being red and short to being green and long. Well, this usually, because prices already moved about 4 points to 5 points just to get here, when the template is going to flip, it's going to be about 7 points from the low, but our entry is going to be about 4 to 5 points from that low. So when it flips, we're probably again going to have a small loss, 1 to 2 points. And trust me, I've seen this enough. And the whole point about this is stuff that can be back tested. We can go back and look at how not a good idea it is to be once we've entered a trade, but Bloodhound flips and tells us something different. One of the other things that I'm going to show you on the live chart is if I put something in blue, like I have right here, that signifies a winning trade where there was a combination of divergences. So in this case, not only was there a divergence on the SPY, but there was a divergence on the ES. So that's what we're basically seeing right here. If when you see something in blue, and again, statistically, that has an even higher winning rate in the high 80s to low 90s in the past statistics that I've done. Again, past performance, not necessarily indicative of future results. So I want to bring up the live charts now and basically give you a look of what it is that we did over the past couple of weeks or the past week. And I have basically simplified it so that what we're seeing over here on the left is the SPY and its divergences. And I'm running two different Bloodhound templates that I've created. So on the left-hand side, it's a SPY. You can see that how we just had a pullback and the software identified an accumulation divergence. Now, if we had been short, that could be a reason to get out of a trade. Now, if we go back, oh, I'm sorry, the chart on the right is showing the new ratio chart where you see this rolling on and rolling off. And again, I really like to see this. I'm going to show you what it's done today live. But first, let's take you back and just do a real quick review of last week. And July 26th, July 25th. All right. So, like I said, I don't want to go through every trade, but basically what we're going to see is I'm going to show you where we have our winners and our losers. Right about here, this is where we initially get our first trading signal 15 minutes into the day. All right. And we have a green VIX. And, you know, it's really interesting that where we get to the top of this, we're being given not one, but two real-time signals to get out. And that, you know, the first real-time signal is the special divergence short signal. And Bloodhound is also flipping right there. So we probably could even call that a winning short trade from there also. See, we've got a full loser here, and there's one of those small losers that just go is a loser because the indicator became non-divergent. Again, another winner where basically we're told to get out. Now, one of the things that I've done in my videos as I've talked about this is where we continue to see special divergences, especially as price tests higher, that is a significant warning signal that we're going to have and enter a sell-off. So, you know, kind of patterns matter to me, and this isn't surprising that we're basically going to sell off after here. Over here on the ES, we notice that we've got more than the black line here on each of the charts represents 50%. And I'm getting the Bloodhound signal when a majority of the charts are now in one direction. So that's basically what we're seeing there. We move this forward, and with the software, I can tell that we're seeing this short trade here, but at these 2 points, we didn't have a signal. So, we, after those 3 losses, 2 of them just being small, there are 1, 2, 3, 4, 5, 6, 7, 8. There's one of those combo trades right there, 9, and then 10 going into this long. Again, really important that you take what is put in front of you, and this should actually be one of those blue. That should be one of those blue markers, because we have both accumulation on both charts right there, as we did right here. That was number 10, 11, 12, 13, 14. It's just really important to understand that without both the divergence indicator and the VIX template, we don't have a reason to get out of that trade. It's gone 4 points in our direction. I'm sorry, 4.5 points in our direction. It may or may not have hit our target. And the software itself, the real-time market signals, are telling us we need to be out. And in fact, we need to be reversed. So, that leads us to a few more trades. Again, here's one of those trades where we enter, and exactly what I described. We have this 2-point loss, and just a real good reason to take that loss, because we don't want to take a full loss, and we definitely don't want to stay in that trade. Again, a few nice trades. Again, there is our pattern, which we have down here, and this is a pricing pattern, which I call exhaustion. And exhaustion is a topping and a bottoming pattern. So we have a price pattern down here. You can see that on the ES chart right here, the exhaustion symbol. And what do we get? We get a 71 tick reversal to the upside. So again, I didn't mark this as a trade because right there at the apex low, we were still reading red. Up to you whether or not, when you're only 3 ticks away from the low, whether or not you enter that trade. But if you just go by a strict definition, I left that out, something that if you wanted to do, obviously you could. Another combo trade right there. What was interesting, I didn't actually add up the wins and the losses, but I did notice that there wasn't any losing combo trades, and there's probably about 10 or 15 of them through this series of the week. Right here, this is a bad tick, but right there would have been a legitimate signal to short. That's why I didn't put the circle up here. Again, small loss there, nice win there, get out there, short, 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 short. Again, you're being told, get out of these moves. That's again what is just so important. We get into this really interesting runner right here, where we've got our combo long trade, and we come back and look at our the new ES template, and it goes solid green, stays solid green for 52 all the way up to 76. So something like 25 points. Just a really way to look at this. When we look at this, we can then see how once we got up to here and at the top, right at the very top, again, we have our exhaustion pattern, and we can see the bullishness wearing off right at the top, and this switch from bull to bear. that is the end of the day there. This is into the close. So there's no quote unquote trade right there, but the indicator is still picking that up. We bring this on to the next day. Again, a lot of the same, a lot of winning trades, very few of these small losses here. 1, 2, 3, 4, 5, 6, 7, 8. Followed by a couple losing trades. Really frustrating here. We had a lot of signals, but none of the signals really matched the VIX right here. Can't take it because right here we just don't even have a signal. We had lost our green VIX back there, so we really didn't have a signal. And brings me up to a really good point. The point of this strategy that I'm showing here is that we not take every signal. We're not trying to be flipping this every single time. We're only waiting for the divergences that are in our favor and waiting for the VIX to be in our favor. And Rochester, I get it. I am going to fast forward to a real time there, and so that you can see what is going on today. But like I said, I just want to go over some of the volatility from last week. And Rochester says hindsight always has winners. No, what I'm doing here is I'm showing where you're actually going to make the trade from and where you would actually have your winner or loser from. So it's not a matter of hindsight. This is the picture that you would have seen if you were trading live, and you know that doesn't change. And again, that's really the important thing about this. I'm not trying to fluff this up any. I'm showing you, this is where we're gonna be trading from, and like we are gonna get live shortly. A few more winners. And now we're basically going into the end of the day. Again, we can see over here on the ES where we have our pattern here, broken reversal with SPY divergence and VIX. We could see the ES rolling in onto the end of the day. Now we get to FOMC day. Again, nice winners, small losers. Again, love to see the combo right there. And this kind of brings to Rochester's point, this is where we have divergence. This is where we have red VIX. So this is where we likely would have entered a trade, but this trade's higher right there. So, that's what I'm trying to do, is present a realistic type picture. We go into the, here's the FOMC decision. Got a couple nice trades right there. I'm ignoring just the absolute decision itself. We'll start looking at, we're now 3 minutes after the decision. Losing trade right there, but generally winners. And this is going to happen. And here we at 2:34, this is when Powell starts speaking. He says something and the markets react immediately. This is why you don't want to be trading during a news event. There just isn't a way to react fast enough when Powell is opening his mouth that fast. So that takes us into a bullish set of trades. And again, we can see how the new VIX template stays green, stays solid green, and we get several very nice trades here. And again, into the end of the day, more nice trades, more double divergences, and end of the day, or another double divergence up there, and into the end of the day right there. Thursday, again, we have a really nice sell-off. We catch most of that. We go green. We get a couple of nice trades. See, we have plenty of opportunities to take a trade. This is why we don't need to trade every signal. You know, in 30 minutes here, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 11 trades in 30 minutes. So, you know, there's no reason to do anything that was, you know, weird or crazy. You know, spots here where the indicator goes non-divergent, same here. Those are, you know, completely great, you know, when we can just take a small loss. Again, we enter this period of solid green, and we see us trading all the way down from 39.94 just straight up. And the new VIX template stays solid green. We've got trades all the way up. Here, example again, we've entered right there. VIX changes to green, unfortunately, right at that peak. So we're gonna have to take that as a loss. All in all, not, you know, really a nice week. Like I said, I didn't find any that had losers that were this combination loser right here, which was really kind of nice to see. And let's just go and when we look at this morning, so this is all what painted from live chart. We have our first trade right there. This would have been a loser, so we'll mark that in red because we're getting the signal right there. It just keeps going. So, you know, let's be fair about it. Easy long right there. Easy long right there. Easy long right there. And again, you know, real-time signal right here to get out. Probably the hardest part of this trading plan is this. We've got our long signal right here, and that was good for over 12 points right there. But we're likely getting the signal to get out right there. And then the market just continues higher. Do you follow the plan and get out like you did right there? Or do you, you know, try to squeak these out? That's probably the hardest part about this system is you are being given a real-time signal right here to exit. Do you take that signal? Again, long trade right there, no trade there, no trade there. Long, long. Now we enter this sell-off post the news. We don't have a SPY right there, but we did have divergence. We had distribution divergence over here on the ES, so I'm not going to mark that. We had trade right there, trade right there. We had a signal there that is going to take us for a loss because it's going to trade much higher right there. And again, you can see we're going to be in it right about there. And, you know, 2-3 points later, this thing is green, and you can see why we don't want to trade against our green VIX. I'm not going to call that a signal right there. And basically the reason is if I come and look over here, what has the trend been when we got this signal? And I can look at my Bloodhound template here. I can basically say that, you know, as we went into this trade, we're losing the bullishness and gaining the bearishness. So, you know, I would have, that would have been something that we would have passed on. Long trade right there, going into short trade with a negative VIX. Again, there's that exhaustion pattern right there. We can see that on the ES chart, this test of a high. One of the rules I have too is I don't want to short into what I consider a strong trend. And again, that is a price pattern. We're not talking about that. And the reason is if I tried to short into this strong trend, well, and let's say I entered in here on this pullback, well, I immediately am underwater. But if all I did was wait until I had my exhaustion pattern right there, I had my VIX, and I had my special divergence, I'm never underwater on this trade, and it goes for almost 12 points, 11 and 3/4 points. So, you know, again, I have these trading rules for a reason. I've lost money trying to short strong trends, and that just doesn't work out. Again, a couple nice short trades, no trade there, short trade there, no long trade there. Losing trade there, and we're almost into real time. Right there. I don't see anything there. And we are now basically in real time. I've answered Rochester's question. Anybody have any questions on what we're seeing here or anything about this strategy or the options that is basically driving this strategy? It's not fully automated. And the reason it's not fully automated is this. What I've done with the divergence signal, the divergence signal itself is, first off, it's not able to be picked up by Bloodhound. But second off, the part that could be automated if you were to create something is if you wanted to create a Bloodhound signal just based on the VIX, that could be automated. However, the part that involves divergences could not be. And part of the reason is my programmer that created the divergences didn't create it with Bloodhound in mind. And it is, what he did is literally impossible to get Bloodhound to recognize all the signals properly. It's not for lack of trying. It's not for a lack of money. I have gone to basically the 3 best programmers, and all of them tell me that what he did can't be made recognizable in Bloodhound. And Rochester's asking, is it based on VIX options or the VIX itself? It's based on the VIX 9D, a few other things. And that's kind of, it's kind of an interesting question too, because right now it's based on 3 things based on price and 3 things based on VIX. So what what this is, the way this is, the reason that this is interesting is this, for especially for this chart over here, where we know that price is going higher right here. We know that, we can see that. So the three things that are basically picking up price, we know that that's what's generating this part of the Bloodhound signal. But we know that the VIX part, which is this down here, is those three signals are definitely still red as this thing climbed higher. We're calling it a loss just because, you know, it went into a strong trend. It went almost 7 points higher. That is a loss. That's a full loss. But the VIX itself didn't flip until actually it had peaked and started coming back down. So again, now the opposite. This is very unusual, but you know, we're not taking any trades here. This is why we stick with a set of rules. The VIX, as price is now falling here, that's what's accounting for this red, and the VIX is remained green up until we get our short signal right there, good for 12 points. So remember, the other thing too is what we're trying to do here is we're not trying to pick off a high and the low. I did show you where we picked off a high earlier on our earlier charts, but I'm not trying to pick off a high and the low. What I am trying to pick off is once we've entered a trend, once the VIX has entered that trend, and then I have that divergence, well, that's what leads us to our higher statistical probabilities. And Matt, you're asking that if this is going to work on others. Yes, it is. And that was really what is, such as Apple, Meta, NVIDIA. It is because what is happening is these divergences are being picked up on all tradable stocks. So yeah, if I were to want to look for divergences on an individual stock, I would find them. To give you some kind of example of that, this is the UVXY, which is a VIX stock that you can buy or sell. And what this is showing us is that there were these divergences here on UVXY. They all still occur. And like I said, this is what was really amazing to me when I saw when I just went to go to analyze volume, and I saw this on the SPY chart. I just saw these divergences. So yeah, it is going to work on other charts. Any other questions? And I want to come back to the PowerPoint real quick. If you are new, want to see basically what I am doing on the ZoneTraderPro blog, what I've done is kept up with these weekend reviews. I think they're real important. And I did have a problem with my plugin for WordPress. If you like and would like to get some of these emails when I post something on YouTube, you know, put your name in. Don't sell your email to anybody. all you do is get a notice that I have put something on the blog. I don't try to sell anybody anything. I don't send out mass marketing emails. I don't do anything like that. The only thing I do is post things that are relevant to ZoneTraderPro. So basically, to conclude what we've seen here, options dealers, they really do need to hedge these trades. And that's why you're seeing these very high percentage trades using the ES and NQ futures. The VIX is that market fear gauge, and it normally falls with a bullish move, rises in a bearish move. This is how we figure out our trend. This template is basically going to teach you how to avoid high risk situations by trading with this trend and by trading the VIX. And I really want to note here too, one of the things that I do is I take you through the training personally. So the first thing we do is I teach you what a pattern is, because these patterns, they identify risk. Second thing I do is talk about the order flow, which again, I'll state it again, in my opinion, volume analysis is much more important than order flow. The next thing we talk about is divergences, the volume analysis, and then lastly, we get into the VIX and how that applies. When you have the combination of all 5 of those training sessions, basically what you have is the tools to create a trading plan. You've seen me go over the entries to that trading plan. The only thing that's missing is you have to define your exit. You have to define what you do when you are in a trade and you haven't reached a target yet. So, you know, you pretty much are completely there, but you still need to make some of your final decisions. ZoneTraderPro is going to show you this real-time information, which includes the volume analysis and these divergences. And it's the only way to effectively trade using real-time information. Can't say that enough, because if you're relying on indicators that just tell you something that is overbought or oversold, there could be a very good reason, as we've seen, you know, why something is overbought, oversold. We've seen the VIX template go green and take us up 25 to 55 points. And I would definitely guess that every quote unquote indicator out there, MACD, RSI, CCI, whatever, they're all going to be showing you overbought conditions, but you try selling that overbought condition, well, you would have been a loser. I just really want to impress upon you how important real-time information is. And one of my current customers, Desmond, says, I want to thank you big time from a grateful paid up customer. Thank you very much, Desmond. I love the real-time thank yous. As I also said, ZoneTraderPro has the divergence and accumulation built into that divergence toolkit. Very interesting, because it is one way to see divergence and accumulation, but with the numbers, and this is again something I didn't really mention a lot, is there's numbers being created here, and this number down here is showing me how much people want to get long, want to get short. So this is a ratio right here, and it is a really important volume analysis tool to show me how they're doing this. And basically what this tool is showing me is as we started measuring resistance right here, what is interesting is it actually showed resistance to this point right here. So from here to here, they were actually putting in resistance. Now, as it enters this strong trend, what happens is you see this indicator going in the opposite direction right there. Price is going higher, the ratio going lower. And that is what tells me that this is going to go higher. That is what volume analysis is in just a pretty easy nutshell. And you can see right here, well, as price got higher, the limit order resistance, the volume analysis kept going higher, got to a number up to 51. And then we had this 11-point pullback. That is, again, that's why I say order flow is less important than volume analysis. What you need for order flow is you need a bar to complete. So you need price to be trading all the way down here before you can see what it is that it's going to tell you. Well, I can look at this and I can say, I can see the resistance building and coming in the form of limit orders right here. And that is a different type of distribution than is being picked up on my indicator right here showing accumulation and distribution. Again, so there's really there's two types of ways that we bring all this together to see this accumulation, to see this this distribution. If we want to add another sell signal right there, again, good for another 12 points to the downside. And again, this right here, this kind of illustrates your hardest problem in that right there, we were showing distribution or accumulation divergence up until it tested the low. And when it tested the low, that's when it went non-divergent. That's your hardest decision. You've got 4.5, 5 points in the bank, and do you take it off? In real time right here, you just saw what happened. And again, this is kind of a good education. The number of shares short is only 300. It's now 1,900. I apologize for making these small for the demonstration, but you saw right here where it was divergent, it became non-divergent here. And again, it is showing us that as price moves higher, now it's back to non-divergent. These numbers mean something. Right here, the number was over 48,000 shares short. This is only when it was right there. They were only 2,000 shares right there. So that signal itself mattered, and it was what you can consider a lesser signal, because while it had come up 4 or 5 points off the low, the numbers of shares them being short definitely wasn't the 48,000 that was right there. This one was 22,000. This one was only 8. This one was 68,000 right there. This one was 98,000. So numbers do mean things. Part of the something that we can see over here on this chart is we can see the numbers in the delta right here. That's the number of the delta 1,214 from the low to the high. But we also see right here, one of the features that I built in is we see that this is the live number, and the live number is based on all trading from back here. So the same with the ratio, we can see that from this point here, the ratio has been building, and the ratio isn't just based on what happens here. The ratio goes back, picks the number from the cumulative delta up here, and is measuring it from that point, even though this is where we flip from support, measuring support there, to measuring resistance here. This big line right there, that doesn't mean anything, because that is the flip from support to resistance. So it was showing us support right here. And like I said, there's our live number, and we can see that we've got some pretty heavy selling, pulling it down now a few points. I thank you, Giles, for your very interesting smile. Is there anybody else that has any questions that I'm kind of glad I was able to get in a little bit on this volume analysis, because it really is important when we go to look at this. Again, you see, this is I see something and I immediately want to talk about it. Here we can see that this was painting green and going lower, okay, but the ratio here was going higher. So when they're not in sync like this, this means that they're getting out of the way here. And what is going to happen? Well, from here, we're going to go from 40 all the way down to 26. So about a 14-point sell-off. So, we can see that in our ratio indicator right there, whereas we're not going to be able to see that with order flow. And, again, this is why volume analysis to me is more important. Let's see it just real quickly. Again, this is our volume analysis here is telling us the same thing. We have price going straight up, and we do not have any resistance being put in at this time. When you see that, this can factor into your decision on how much risk you want to take. If you have SPY divergence right here, that sellers are getting out of the way and price is going to go higher. Well, if you know that, then there may be less risk here, and you may want to adjust your trade accordingly. You could see that it wasn't until this point right here, that is where we finally entered into some actual resistance. Going back to here, this is support to this point right here. And then look at the line just goes straight across. They're not giving it any more support. Price is going to go lower. Just again, some really interesting volume analysis that I love to do. Giles asked, how much time does it take to fully understand and use your approach? The hardest thing you do is understand when we have a pattern. And the pattern is what we do first. And I want you to understand patterns, because that's how you understand risk. When you understand the patterns, and you can put the patterns on the chart like we have here, but I want you to understand them, because it's just a simple 1-2. This happens, then this will happen. I want you to understand these completely. I don't want you to be surprised with an arrow. So that's kind of why I have you do that. That takes probably about 5 days to a week to where you feel comfortable in saying that, okay, I've got this reversal from minor right here. That's going to take me into an exhaustion pattern. And if that exhaustion pattern works properly, we're going to sell off. And basically to the tick, we did. Really a nice pattern. That was going into a news release 3 minutes before a news release, but nice to see the pattern working. After that, the training on order flow is very minimal, probably about a half hour, because the order flow, and I don't even have an order flow chart up, but the order flow is basically telling you the patterns, and it does have a few interesting things that you can pull from it. But it is telling you the patterns, because there's no way you can just look at these numbers and figure it out. You will have headaches like you would not believe. So for the order flow, we let the software do the work. The next thing is looking at this volume analysis, and I've basically done videos and I have PDFs for you. And it really is nothing more than, you know, what I did to learn this, which is just pulling back and looking what happens when you are in a strong trend, what happens when you get a reversal. You know, you see the increase in the volume analysis. So I want you to, you know, get kind of that muscle memory of what you look for, like right here, where you did get resistance into this distribution short trade. What do you look for? The last thing is pretty much just understanding the VIX, and that's doing the same thing, which is understanding, you know, this thing rolling on, rolling off, and on the SPY, you going and saying, okay, I want to, this is what I want to go back and prove what Chris told me about, trading with the VIX. You know, we had a signal right in here for divergence right in there, but we actually didn't right there have a long VIX signal. We didn't have our long VIX signal to right in there. So if you waited, then entered, you know, what happened? And because we can go back and look at this historically, just like I've done with the July chart here, we can go back and look at all this historically, and we can understand, okay, if we follow the rules, you know, we understand our trading plan. So basically, learning this takes about a week to 2 weeks. The next part of this is you actually saying, this is my plan. This is my plan for an entry. This is my plan for an exit. The next thing is you going live with just one micro contract, just one micro contract, and making your trades and proving to yourself that with one micro contract, what happens. One of the things that I do, and because all this training is personal training, is if you want to go live with one micro contract and then show me your trades, I will come and look at your actual trades and say one of 4 things. You did everything right and you made money. You did everything right, but that just happened to be a losing trade. You did everything wrong, or you did X, Y, and Z wrong, and you got lucky and you made money. And the worst thing to hear, you did everything wrong and you lost money. So, it's kind of like trying to learn a language. And what I've created here is ZoneTraderPro language. You kind of need to have somebody here, and I'm that guy to be here to tell you what it is you did right and what it is you did wrong, so that you can learn, quote unquote, learn the language. So that's basically the answer. And yeah, Giles says, you know, it works well with micros, and yeah, exactly. The point is you want to trade micros because you can fine tune your the amount of risk. And here's what I mean by that. Some of these trades, so for example, this trade right here, I don't have the patterns on this historical chart from July 13th, but right there, that is what I call a strong trend and a strong trend reversal trade. And I consider that trade higher risk. So what I encourage you to do is look to use less micros in this situation than for this reversal trade right there. This is just your standard everyday reversal right there. That would be what I would consider normal risk. And when we have something on our chart that statistically has a, oops, I wanted the SPY. So right here, where statistically we have an advantage right there and right there, because there's a combination of divergent signals, and statistically that gives us an advantage, then you can dial up the micros and basically fine tune your risk by using micros. Now, I don't track the MES here, but I don't want it on the chart. I want the ES on the chart, but I do trade it, and I adjust my risk based on high risk, low risk, regular risk. So I highly encourage the use of the micro contract with this strategy. Some people say, well, it costs a little more, you know, and that really shouldn't be a concern, because if it is, if you can't fine tune your risk with a full contract, or you know, you fine tune your risk, you know, with 3 full contracts versus 1 full contract, if that's the way you do it, fine. But you don't want to take a full loss on 3 contracts, you know, that's going to hurt. If you do it with the micros, and as you get to knowing the system, you gradually adjust your micros higher, lower, you know, whatever the experience is, and basically you can fine tune it with the micros, because the cost of one losing trade on a full contract well exceeds the few pennies that you pay for trading a micro contract. And that's just you know, kind of my own little opinion. The only other opinion that I have when doing this is we don't take a full risk right here and then scale out here and scale out here. Again, that is just my opinion. And the reason is, if you took a full loss from here, you should be taking a full win from up here. So again, something that we can fine tune. The last thing that I want to go over is basically the combination of the software is about $3,100, comes to $3,090. I do give you a Bloodhound discount, and what's really important is that we just not use PayPal to do the purchase. So this $200 off will be valid for the week, and basically it's about $100 cost for PayPal that you won't be paying, and then I'm throwing in an extra 100. Part of the advantages to do that also is that you receive your software immediately. If you use PayPal, PayPal has what's called seller protection. In other words, if the seller wants protection for the sale, he has to do certain things. And one of those is deliver a physical product, which needs to be signed for. So that's why I would prefer not to use PayPal. And although it obviously is an option if you want to put this on a credit card, I get that. But I will save you the PayPal fee. I'll throw in more money because it's I want people to use this, and I want them to basically stop losing money with junk that doesn't work. And basically, I really think that the what we've got with our ES template here is just a really, really nice template that keeps you long when you need to be long, keeps you short when you need to be short, and gets you out of trades and basically keeps you out of a lot of trouble. So with that, yes, Giles, it is a lifetime license. Good question. Thank you. If I basically, going back, when I created the order flow suite in 2017, and added order flow, and then I had people contact me that I hadn't heard from in 6 or 7 years, and I upgraded them to the order flow suite and the divergence indicators, so for free. So not only is it a lifetime license, but if I go and I make changes to the software, I find something else that I find interesting, although at this point I don't know what that is, but I've said that every time, after I created order flow, after I created divergences, after I created VIX, I don't see anything out there, but I always have my ears open to learn. And if somebody wants to give me an idea and I think I can play with it and it involves real-time information, I'll pay to improve my software, and you get that for no cost for the upgrade. So it is a lifetime license, and it is you're not going to be charged for any upgrades. One of the things that got me out, that started me in order flow, is there were 2 vendors, I won't mention their name, that put out order flow. But when I moved to NinjaTrader number 8, version 8, they wanted not only upgrade fees, but then they also wanted monthly fees or a yearly fee. And what I said for that is, I want to, I'm just going to create this for myself. I know what I'm doing. I've traded order flow since 2004. And that's when I created my order flow suite. And that's why I did it. It also, his question also brings up one that I get a lot. I don't offer a trial. And the reason I don't offer a trial is because of all this personal involvement and time that I give you. So, if I'm going to commit a limited amount of time to you learning this, then I just can't do it on a monthly basis. My only other time commitment is that I actually live in the beach in Punta Cana, Dominican Republic, and I have 2 Airbnb condos down here. So my only other time commitment is if I am taking care of a guest checking in and checking out. And I have something like 250 5-star ratings as a super host. So I need to continue to not only provide them service, but I also provide you service. So probably only about 10% of the time I have something to do where I'm not able to do training, but it's not that often. So let's see. Pervez, no, basically I do restrict the license to one PC. If you are going to be traveling, I don't have a problem with authorizing a second PC for while you're traveling. So, you know, that's fine. I don't have a problem with that. And yes, the super host status applies to super coaching also. So I like I said, I try to, I do this, you know, if you need to study at 1 p.m. in the afternoon, so long as I don't have anything like a hurricane coming out of the Caribbean or something like that, I will be available to do training. And let's see. Yeah, so yeah, that's why I say, you know, Purvis, the you know, if you do need your laptop when you're on the road, we can work that out. So any other questions? And I'm not really seeing anything. So here is my contact information. The easiest way to get me is on Skype or from the website, ZoneTraderPro.com. If you go to Skype and just put in, if you just search ZoneTraderPro, I will come up. And you can start a conversation there. That way I can see it on my phone and basically respond a little bit faster. So absent any questions, I'm going to hand this back to Keith and thank everybody for attending today.
All right, thanks, Chris. Yeah, sounds like Gilles and Desmond were quite enthusiastic. Sounds like a lot of really good questions. So I appreciate that, guys. Yeah, if obviously if this piqued your interest and you want to dig deeper, go to ZoneTraderPro.com for any more information. And you know, keep in contact with Chris. Let me share really quick. Our next webinar for Shark Week is actually this afternoon at 4 p.m., just a couple hours, actually 2 hours, 26 minutes and 59 seconds. It is Phil Antonsen from Lucrum. It's been a little while since we've had him, so I'm actually kind of interested to see what he's been up to lately, building diversified system portfolios and automated trading. So come on back if that's interesting to you. And again, if you didn't notice on the Shark Week website, if you go up to schedule up here, you can scroll down because this is such a huge variety of topics. Not all of them are right for everybody. Although a lot of people every year do come to every single one, and by all means, feel free. But if some interest you more than others, by all means, pick and choose. And then, of course, don't miss the final day where Jeremy from Shark Indicators announces Bloodhound 2.0. So we're excited for that in 4 days. So anyway, thanks a lot, guys. Have a great day, and I might see you this afternoon. Take care.